No point in your rambling, incoherent response were you even close to anything that could be considered a rational thought.
Today, at least one or two coming from our guest. He is his name is Chris Miles. He's a cash flow expert and anti-financial advisor. I'm really dying to know what that means. He's a leading authority teaching entrepreneurs and professionals how to get their money working for them today. He's an author. He's got his own podcast like we do. It's called the Chris Miles Money Show. He's been featured in U.S. News, CNN Money, Entrepreneur on Fire, Bigger Pockets, has a proven reputation with his company, Money Ripples, and get his clients fast financial results. In fact, his personal clients have increased their cash flow by over $250 million in the last 11 years. So without further ado, welcome to the show, Chris Miles. Chris, how you doing today?
Good. Appreciate you having me on, man.
$250 million.
That's right. Way more than 1 million.
More than 1 million or 1 billion zillions. So, of course, I want to hear all about the anti-financial thing, but people are going to spend some time with us today. Maybe they're going to click away because of our beards. They shouldn't, because we look really good. But to prevent them from doing that, give us some takeaways. What we're going to learn today about becoming a financially independent.
Yeah, I was able to do that twice by the time I was 39. And the reason it was twice is because I screwed up once, right? So I screwed up once, had to do it again. But the cool thing is I was able to accomplish that twice by the time I was 39 years old. Nice. And I've helped many, many other people do the same thing, to where you work because you want to, not because you have to, right?
Yeah,
which is like the best way to live. You know, it's that you live life by choice, not by, force or living in a rut.
Mm-hmm. Is there something unique they're going to learn today? Something very specific that's contrary? Because you said anti-financial advisor. So is there something kind of different?
I'm pretty contrarian. Yeah, pretty much everything you learn from financial advisors suck.
There we go.
I'm going to talk about why that is, because I used to be one. I used to be that guy 20 years ago, and found out that by not doing it that way, by doing the opposite of what I was taught to do as a financial advisor, that's how I was able to become financially independent. So really, like, how to undo all that teaching and education you get from like the Dave Ramseys of the world and people like that essentially keep you trapped in bondage unknowingly. So we're going to talk about that today.
We might title the show that when we air this, right? The why financial advisors suck, or why most of them. We're going to say all. We'll say most.
Yeah.
Okay.
Yeah, exactly. Again, good-hearted people, but the thing is, they're taught crap.
Yeah. Okay. Well, before we get into the crap that we're going to teach people not to do, give me a little bit about your background.
Yeah. So, I started out, actually wanted to go into business consulting, right? I was going to go down that path. And then as I did that, I realized, if I'm going to be a business consultant, shouldn't I have real entrepreneur business experience? So as a result, I said, all right, great. I'm going to go do that. So I went and dropped out of college with one class to go before my bachelor's. And the first business that came across my way was becoming a financial advisor. Little did I know that all you had to do was pass a test and have a heartbeat, and you can become a financial advisor, right? It didn't have to be anybody special. You didn't have to have a lot of money. You just had to be willing to work your tail off for commissions. And so that's the route I went. Now, the thing is, I actually loved helping people. I loved teaching them about money and things like that, especially as I learned more about money. However, after about, 3 to 4 years, I'm one of those people, I like evidence. I like to know that things work. I started to realize that clients that were getting this kind of advice, they weren't becoming financially free. And even more so, none of the financial advisors, including myself, were financially free, right? And it took a friend of mine. It was at the end of 2005, going to 2006, a guy that actually trained to be a financial advisor left to go do real estate investing. And he asked me, he said, Chris, how many of your clients are actually financially free right now, where they don't worry about money? Not retired, but they don't worry about money. I thought about it. I said, well, maybe one. No, she's not either, because she still watches CNN. If you watch CNN, you think the sky is falling, right? So nope, she's not financially free. He's like, well, great. Good job, Chris. Well, how about this? How many of you guys as financial advisors are financially free, not off the commissions you're earning, right? Not off the money you're making from just selling the stuff, but actually doing those mutual fund type of investments? And I thought about guys that have been working there since really the late 70s, and none of them were financially free either. And I said, well, none. He said, Chris, there is your problem. And I said, well, give me the answer. Obviously, you know something I don't. He's like, Chris, you just got done arguing with me why you're right. Why would I give you the answer? And so that takeaway drove me nuts, right? I wanted it more. I was like, come on, give me something. He said, all right, go get this book called Who Took My Money by Robert Kiyosaki. It's a lesser known rich dad book. Pretty much to sum it up for you, mutual funds suck. They don't work. People don't come financially free off of them. So I read that. I said, okay, I can see the point. I can see that because I've seen the evidence of it. And then he said, well, listen to these guys that do this AM talk radio show locally here in the state of Utah. And so I listened to these real estate investor guys on the radio show for several months. And pretty soon I said, I can't do this anymore. I got to quit. I'm going to quit being a financial advisor, never teach about money again. I'll basically just be a mortgage broker and teach ballroom dancing. Because little known fact, I was one of the nation's top amateur ballroom dancers about 20 years ago. So that's what I was doing. But again, I had to know what these guys knew. So I ended up hiring these guys, getting them to mentor me. And then pretty soon, by the middle of 2006, that summer, I was able to become financially free myself, even after quitting being a financial advisor. And it blew my mind. I was 28, almost 29 years old. I thought, well, dang, that was so easy. What do I do with my life now? And as I had that next 6 months or so to really ponder on it, I realized that I love teaching. And so I ended up going back to work, so to speak, in 2007 to teach people how to become financially independent. Went through a recession and went from millionaire to upside down millionaire during that recession because the business had a rough start.
You are in good company, my friend.
With some of the real estate I was doing.
You're in good company. I had a good sized real estate.
You've been there too, huh?
Yeah, you don't know that much about my background, but I spent 20 years as a real estate investor, developer. I had a real estate radio show in Chicago. I was like riding high in the 2000s. And then 2009, I kind of like, well, it didn't all work out. But anyway, enough about me. I want to hear about your story.
No, that's good to hear because, I mean, it was rough, because I wasn't, the funny thing is the things that got me to be financially independent the first time, I started to ignore because I basically got too egotistical. Like many probably 20 somethings you might run across, especially if they're in the entrepreneur space, they think, oh, I'm amazing. I've got the Midas touch. Yeah, I'm awesome. And that was the best slice of humble pie I could have gotten at that time. And so I didn't file for bankruptcy, but I got dang close. I mean, I had to pay off over $1 million of debt, was able to dig out of the hole so that by the end of 2016, so, I mean, about 7-8 years later, I was finally able to dig out of that hole, become financially independent for the second time, this time much wiser. By the time I was almost 40, and was able to do it better. And that's where I am today, teaching people how to do the same thing. And just really trying to spread that ripple effect, that word to help people create freedom and prosperity in their own lives. Yeah,
it's been a fun road. I talk about myself for way too long in this topic because, the real estate thing was really good to me when it was good. And I was pretty humble. I loved teaching. I was always studying, and when I had a class, an actual live class where I taught people every week, 2 classes a week, how to become real estate investors. And I was always active in the game. I wasn't just a teacher. I was actively buying my own property. So I was active with it. But I had to, people talk about their 2009 dip with their foreclosure or whatnot. I said, I had 19 foreclosures. It was, it was a massive catastrophic thing. But we bounced back. We didn't die like, some people did, but so what do you do? Is it just real estate? Would you have a more holistic approach? What do you do? What's the deal?
Yeah, it's more holistic approach. I mean, definitely we look at alternative space, right? Because really anything a financial advisor offers, it's kind of like Mexican food. Think about Mexican food, right? Same ingredients, it's like the cheese, the meat, rice and beans, right? Lettuce, tomatoes. It's the same stinking ingredients. They just repackage it differently. If you really dumb down what financial advisors offer, and again, these guys have good hearts just like I did. I would say the vast majority of them are really good people, but they're taught stuff that's really just theory that has yet to work in actual application, which is you're not seeing people become financially free. You don't hear people bragging about how they became financially independent from their 401ks at work, right? You don't hear people bragging about this stuff. You don't even hear baby boomers saying, hey, I feel much better after 30, 40 years of saving in these mutual funds. I'm financially free. You don't hear that. If there are financially free people
nowadays, back in the 70s and 80s, it could still be done because some of my family members did it. But nowadays, with things the way they are, you're absolutely right. I don't see that being a path. You're right. Who's bragging about I retired on my pension or my 401k? It's a good point.
that's the key, is that a lot of people would just put money into, they have pensions and other things to help it out. Social Security, they get 100% of Social Security, not 70% like we're predicted to get, right? I mean, they had so many other things.
Right.
And I'll tell you, like, the thing I've noticed too, even despite the last.
Oops, you froze there a second. Yeah, connection. We're gonna have to edit this one now. Shoot. That's a first. Oh shoot.
Yep.
I don't know. We'll have to do a little editing, I guess. I've never had to edit these things before. For some reason, we had a dump out. We'll just keep going. Go ahead.
Yeah. So anyways, like I was starting to say there, is that, the last 13 years have been very friendly to us, but the average of the market for the 30 years has only been 8.4%. That's the real rate of return of the S&P 500, right? Well, the problem is people think, they're like, man, this trajectory, I'm going to retire. This is very similar thinking people had in Y2K, right? Y2K, or like my dad thought he was going to be able to retire by the early 2000s. And then he decided to go all tech stocks on his mutual funds, on his 401k, and then it dumped, right?
Right.
And so it took him another 15 years before he could retire. And even then, that's because he knows he probably he won't outlive his money. He's going to die first. So that's the only reason he has faith that's going to work. That's not the way to go. And I'm telling you, like, you run the numbers, you can't really save your way to wealth. Even the people that did it before, or the people I've seen it now, when I ask them, like, well, where'd that money come from? It's usually because, one, they had a business and they sold the business, or two, they have something else coming in to supply them, right? It's not mutual funds by itself, like every financial advisor teaches. And that's the thing I'm really preaching against, is, guys, like, you can't just do the same old crap and expect to get different results, because people aren't becoming financially free. I've run the numbers. I mean, it's virtually impossible. You want to, in 20 years, you want to retire with a $60,000 a year lifestyle, you better start saving about $6,000 a month, right? Like,
well, and we always think, oh yeah, I love that one line that I've heard, like, well, you don't need as much when you retire, and I had one friend that tried that. He tried to retire at 45. I'm like, no, I have all this time on my hands. I spend more money when I'm retired. I want to go over and do things. So, and with inflation being all hidden now, because they hide all the real numbers on inflation, it's that's 60,000. You probably need about 80 or 100, I'm guessing, in today's dollars. I don't know. Depends on the time, right?
And it just keeps going up, right? You can't expect you're going to get there. And that's what happened to me the last year as a financial advisor. I was getting depressed when I try to run more realistic numbers. I was like, oh, that doesn't look good. There's no hope there. So, okay, I'll just make inflation lower. And hey, I'll make the return to the stock market a little bit better. Or, hey, maybe you'll just keep increasing every year, keep saving more and more and more. Because, hey, your wages are going to keep up with inflation too, right? And all that kind of junk. And that's the thing, is that just in practicality, it's not happening, And I even met one guy. He is retired. He's in his 70s, and people were like, "Hey, this is a neighbor of mine, right?" So they're like, "How'd you do it?" He's like, "Oh, I just saved in the stock market. I did this." But then when people really started to dig in and ask him more questions, he said, "Well, technically, I've got 2 pensions coming from 2 different companies. I got Social Security, so really, I don't even need the money from the stock market." And that's the thing, is like, it's just not working in practicality.
Right. Okay. So we know that the common denominator here is like, most advice is pointing you towards a direction which isn't going to give you what you think you're going to get. What's the answer here? We talk about real estate. You said a holistic approach. What's the contrarian formula here, or recipe?
Yeah. It's always about not focusing on how much you accumulate money, but how you can accelerate money. Right? It's about cash flow, not accumulation, right? Because when I was taught as a financial advisor, here's my goal. My goal was to retire by the time I was 40, and I was going to have to save all the way up to having $2 million. So then I could live on like 3% a year. Because the truth is, that whole 4% a year living on your money, too much. Like, that's way too much. It's way too much money. You'll outlive your money. I guarantee it. Unless you die quickly. Keep eating ramen noodles. You might get there. But I don't recommend a short lifespan so you don't outlive your money, right? So 2 or 3% is all you're supposed to pull out. Well, if you happen to save $1 million, that's 20 or 30 grand a year, right? That's living in poverty as a millionaire. You're a broke millionaire. Now, that same $1 million, and I've had many people come to me, they're like, "Hey, I've got money just sitting around." It could be like couple 100,000, 500,000, couple million even, right? I have one guy, he wants to live on 500,000 a year and he has $3 million saved up so far in his mutual funds. And I said, well, keep going. Even though you're 53 years old, you're going to have to actually quintuple this money. You have to get up to 15 million so you can live off 500,000. And that's why the financial advisor told him, you're doing good. Keep going. You're doing better than most. And he's like, well, if I want 500,000 a year, I've got to keep saving like crazy over the next 12 years to hopefully retire by 65. And I told him, I said, listen, you got $3 million sitting there. If only instead of focus on just trying to accumulate and then live on less than the interest, which is what the stock market answer is, what if we can actually generate streams of income coming in that pay way more? And so I told him, I said, listen, like we've got funds and different investments that I have connections to that will pay you at least 10% a year. So do the math, $3 million at 10%, instead of trying to pull off 90,000 a year, like he might with the stock market, now he's pulling off 300,000 a year, and he can even get better tax breaks than he would doing the stock market, which basically give you no tax breaks, right? Same thing. If you got $1 million, that million, if you don't want to live on 20 or 30,000 a year with then pay taxes, what if you could live on 100,000 a year with less taxes, right? And so the places you can do that are things like in real estate. There are plenty of real estate investments you could do that in. Some actually will pay more, but some are just simple funds where you pull your money together with other people, buy an apartment building, right? You don't have to manage it. You don't have to deal with it. Even when I buy properties and I buy and own my own properties, even if it's a single family home or duplex, whatever, I don't manage the property. I don't clean out the toilets or deal with the tenants. I don't even know their names, unless I go look up on the paperwork what their names are. I turn it over to somebody else to be the property manager and I collect the checks, right? And even after that, I usually make at least a 10 or 12% rate of return. Of course, things can vary. Sometimes it can be better. Sometimes it can be worse. We had two properties this year that, didn't pay that much just because of like a fence got damaged. So after you factor in the damages, we made a little bit, a few $100, but we didn't make a few thousand like we expected.
Right. Or one of my friends in Canada, she was like, we're not getting any rents because the government said, don't bother paying your rent now. I'm like, oh crap, the mortgage is still due, but the rents, yeah. No. Well, and
on the other side too, like we have a property in Memphis, the last 3 years, it's done a 280% return on our money. 280. I mean, the market hasn't got close to that, despite it hitting some of the biggest highs it's had. Right.
Is that on cash flow or equity or both or depreciation? What do you,
all the
how
above.
do you calculate 280?
Yeah, that was all the above. If you factor just cash flow, it was about 40% over the last 3 years.
40% cash flow. Wonderful. Yeah.
Yeah. Cash on cash returns, right? Not including appreciation, any of that stuff. Of course, they paid down my mortgage for me too. So that built a few thousand extra returns as well. Right. But my 32,000 has already made another 90,000 on top of the 32,000 I put down on that property. So
I remember when I was active in real estate, Chris, I'd have calls from brokers, right? Stockbrokers and real estate guys. Stockbrokers and financial advisors. And they talk about these numbers. They said, well, I don't know if you can help me out. I got 2 questions for you. I said, one, how much do you make? Because I don't want to take advice of someone who makes less than me. That doesn't make any sense. And number 2, the last deal I did, it was infinity return. Can you got anything like that? Because I did a lot of no money down deals, right? With like highly leveraged deals to get them going. But then I would either flip them or hold them or refinance them. I do things to make cash out of it. But yeah, people don't understand they look at real estate as there's risk reward. You're more risk with people and tenants and property and government. Yes, and everything is manageable to a degree. But don't forget, it's not just a cash on cash. Depreciation, equity, value add. There's so many other ways to get a return on that, as opposed to, as the stocks and mutual funds. So yeah.
And that's even actively investing. I focus more with helping people passively invest, right? There's no doubt actively investing, you can make even a higher returns than I'm talking about easily. But it requires time and energy. And just remember, that's different for everybody. Because some people have the time. They're like, well, I could do this, and they can make much better returns. I've got people that, do like land deals, and do seller financing and flipping of land and things like that. They can make like 80 to 100% returns on their money each year, Right now, I just went passively invested in a land deal so I can make, do a split on that where I at least make a 50 or 60% return, never going to guarantee that, but hey, I don't mind if I can make cool money on that. Sweet. I'll do it.
Yeah. I had a friend who, He bought, it was a smallish town, but there was an old gas station that had closed
Mhm.
up, and he looked it up and called around, and nobody wanted it with the tanks, whatnot,
Mhm.
and he found someone, a bigger company to buy it. They would do the remediation, all that. He just sold the contract for like $1.1 million. So he didn't. I mean, he put like a deposit down to hold the contract. I
Yep.
think it was like 20 grand or something like that, and made a
Yeah.
million one on it, right? Or
Yeah.
so there's a lot of ways to do this stuff. When you talk
And it
about the
doesn't.
passive, go ahead.
No. Well, I was going to say, just add to that too. Like, you don't even have to do it just in real estate. I have a client who's doesn't want to have anything to do with real estate, right? But oil and gas, he's like, hey, that intrigues me. Like, great. Well,
Yeah.
let's find some oil funds and see if we can make some good returns there, double-digit returns a year on that. Franchises, is another option. I have a few clients that were already in real estate saying, yeah, but I want to diversify out of that a little bit. Cool.
Yeah.
Well, they just bought a laundromat. We connected with a dealer to a broker to help find a good franchise that meets their kind of desires, their lifestyle, and things like that. And they got a laundromat up and functioning.
Right.
Like, there's all kinds of ways to make money that's outside the stock market, but we're always led to believe that is the only way. And the truth is, if that were the only way, then we have no hope because people aren't becoming financially free off that. But there's been millions of us that have gone outside of that path in this alternate space that are making much more money with less risk, much better returns, and we have more control of our money.
Yeah. So the big question I have and I've asked for a lot of people in the space, like other people in the industrial real estate space, whatnot, who are, they understand the markets and economies and the value of the dollar and international finance. And I know enough to be dangerous, but I know this, it's like, with our budget and what we're spending as a country and what we're bringing in and the debt against GDP, all this stuff. It's like, number one, it is mathematically impossible to pay off our national debt right now, right? We're way past that. It's impossible.
And they never want to.
Well, we cannot. There's not enough. I mean, you can't. There's not enough printing presses to do it. Number one, which would just make cash and wheelbarrows again popular. But with this delay of the every 7-year recession, we haven't had one now. It's way overdue. What's your take on how it might unfold? How the value of the dollar is going to be affected by all the things that are going on. And then the most important question out of those three is, okay, so where is a semi-safe place to go?
Yeah. I'll tell you, like, the government, if you're expecting them to ever pay off debt, no matter which side of the aisle you're on, they won't. Not because they can't, because even if they could be fiscally responsible, they don't want to be because they're playing the inflation game right now, right? I mean, when we see inflation already the last year has been about 8% over the last year on the producer price index. Consumer price, it's so altered. Don't even trust it. Like, that's a government.
They don't put food in there and stuff. Like, come on, guys.
No, even when they do put food in, they do different stuff with it. It just makes no sense, right? Like, and that's been every president since Carter. They've messed with this inflation index so it looks lower than it is in reality, right? But we know it's at least 8 or 10% over last year. Your bank accounts pay what, point nothing percent?
Yeah. You're definitely losing 8% a year, easy. Yeah.
The safe place to be. And I wouldn't even say banks are that safe, especially if they get over leveraged, right? And the government, they know this. That's why they get such low, they pay such low interest rates on their debt, because they're like, hey, we pay 1-2% to another nation. Who cares? We just made money because inflation is 8 or 10%. So now our assets that we're holding made more money than what it cost us on the debt side, right? So they're playing that little inflation game, kind of like we have been. When we buy real assets, we're outpacing whatever we're paying on a mortgage payment, for example, because we know we're going to make more than 3% or 4% a year.
Yeah.
Now, where is it safe to be? I mean, there's not a lot of places that's going to be safe if you're playing if you're gambling with your money. So if you're speculating, stock market, I don't think is safe. I think even with inflation driving the market up artificially because it's just driving up because it tries to keep up with inflation, the thing is that most of the stock market dips that have happened, right, didn't coincide with a recession. They kind of were off. They weren't even at the same time, right? In fact, if you have like an economic, like actual bad downturn and the stock market going down at the same time, it's only happened about 5 or 6% of the time. You'd be better off saying, is it a rainy day? Like, you have more odds of success saying, the stock market goes down on a rainy day, right? So don't even worry about economy and stock market. But the fact is, you're gambling. Bitcoin, a lot of people are doing like stuff with that. Again, speculation, and governments want to control that kind of stuff. So be careful of that. Like if you've become a millionaire because of the stock market, because of Bitcoin, just know that can be taken away in an instant. So be careful of that. Again, I like to go for easy places. I go for places that have real assets. This is why I am buying real estate. This is why I'm buying the things that actually have real intrinsic value. Heck, I'm even buying a little bit of gold and silver. Not a lot, because I want a cash flow, right? I always want a cash flow of money. So that's why I'm looking at real estate, even commercial. I'm looking at like self-storage. We're looking at things with, like I mentioned, land and things of that nature that with inflation, especially, those things appreciate much higher. Other place I look at, rather than storing my money in the bank, I actually store my money inside life insurance policies. So the one thing I actually use that insurance guys will use, although they don't use it the right way, is I'll store money inside my life insurance, but I'll get as low cost as possible. So I actually am able to double dip on my money. So I can not only let it store there and make at least a 4 or 5% guaranteed tax-free return, but I'm also using that money at the same time to invest. So I make money over here, like in my real estate, and I'm making money here, usually netting at least another 2 to 5% return on top of the money I'm making in my real estate. So I'm double dipping my money while keeping it safe at the same time. So those kind of things I've been doing with my money. It's pretty simple. It's really not rocket science. I think the thing is, for each of you guys listening out here, this listening audience, is everybody's different, right? Everybody has their own little formula that works right. And you just got to find that right formula that works for you.
Outstanding. Yeah. Everything has a risk and reward to it. So it's based on the, a person's personality, but you're right about the real asset thing. It's, when it's a tangible thing, depending on what it is, at least you can touch it. I know I've got, a couple of friends that I've invested in fine art or exotic automobiles. And I'm like, what? Guys, we don't drive them, but they've like doubled in value in the past 10 years. Like, it's a really good investment. Like, well, I'm not buying. And then somebody was selling shares of Ferraris. I'm like, okay, it sounded speculative to me, but their numbers looked like, well, that sounds interesting, but I couldn't go grab a muffler, right? It wasn't like I couldn't get a piece of that, like a REIT, you have, I have a share of a REIT or share of a trust. Okay. I can have something tangible, but the car thing is weird. Yeah. Interesting.
Yeah. And even then, like a REIT's just a paper asset. It's not even backed by anything that real, and even when they buy their stuff inside the REIT, they kind of do a crappy job,
The real estate inside a REIT?
Well, when they do REITs, I mean, they're buying the real estate portfolio, but they don't care about the growth. They don't care about cash flow or anything. They're just trying to buy an asset, right? I mean, they'll buy overpriced when they do it. They'll buy.
Yeah. I've never invested in one. I just saw the numbers out. I'm like, oh, man, I got a 2 cap rate. What the heck? What do I want with that? It's weird.
Well, and the truth is, if something goes wrong, it's not like you can turn around and say, hey, you know what? You should sell that property. You can't go to the money manager and say, you know what? You should go unload this or do that or that to make more money. They don't listen to you. Whereas real estate, you can have an actual asset and control it.
With your passive investments, you personally, the people you've worked with, when they're passive, let's say I'm not going to go be a landlord, but I invest in a fund, some credit investor pool.
Yeah.
How do you have? Is there like liquidity in some of those, or is it just in for the 5-year thing? Or how do you structure those?
It depends on the deal of what they're doing. So I don't do any investments myself where I structure the deals. I don't raise any capital or anything like that. I more help people strategize and then connect them with those deals. Right.
Oh, nice. Okay.
So I stay out of it completely so I can be, have more pure advice versus saying like, you know what, this is my fund, invest with me. Right. Okay. Which is what every financial advisor does anyways. So I gotta be against it. I gotta be the anti. So I don't raise the money for those deals, but I might say, hey, based on your timeline, this might be good. There might be, like you're saying, like there could be a 5-year deal. Well, it depends. Is your goal growth or cash flow? Or in some cases, some people might say, well, both. Like I got a good timeline and I'm trying to get some cash flow too. Yeah. Cool. Well, maybe we do look at this deal instead of this deal, because this one's more growth oriented. This one's more cash flow. Maybe we do that. We look at, is it, time frame? I had somebody who said, hey, this one's about a 3-year deal. This is the exact time frame I'm looking for. What do you think? And I said, well, I know that guy's paid all of his investors every quarter since 2003. Not guaranteed. But if you're going with the guy, I mean, he's been through a few recessions and a few bumps and bruises and still honored his commitments. That says something, like that's a good deal. And not to mention he was going to pay a 12% minimum return. That wasn't bad either. So that's good. You think about you invest $100,000, you make, $1,000 a month average, or 3,000 a quarter. I mean, that's great. Those are some great numbers to turn around to create more returns. And So
Yeah.
yeah, it's always different based on what timelines are and what your goals are.
I love it. Yeah, I got one of my clients does he sells he does debt financing for strip malls with
Mm,
generally an anchor tenant there. So if somebody wants to go and build a strip mall, the Starbucks there, he'll go and raise the debt for it, and then have
yeah.
investors invest in that. It's a very modest return, but he says his due diligence checklist is the best I've ever seen in my life. He'll like go into like, you know, the subcontractor's history of completing jobs from 1990. It's like he's really detailed on how deep he goes. And the number one thing was what you just said was, okay, the person's put it together. What's their track record? What's their attitude? What's their beliefs about all
Yeah.
this stuff? Because some people like, hey, I'll try something and they roll the dice, and then they let the investors, out to dry. And some people
Mhm.
know their reputation is the most important thing to them. And that's the
Yeah.
kind of people you probably want to work with, I'm guessing.
That's right. It's
Yeah.
in those cases when you're turning your money to somebody else, it's more important about who's doing the investing than
Yep.
what they're investing in. Because
Right.
you look at all their little pro formas, the thing that showed all the numbers, right?
Yeah.
They,
Just
they, they all look great. They
of course,
always
you
show
got to
some
put out the
great
crap.
number. Yeah,
I might adjust the inflation figures just to make it look better, right? I mean,
exactly. It's like the old saying, figures don't lie, but liars figure, right?
no, that's great.
It's so much more important to say, like, all right, who is this person? Have they been through some pretty rough times? And like, for example, have they gone through last recession? I sat
Yeah.
down with a guy who he got investigated by the SEC during the last
Mhm.
recession
Mhm.
and got hosed, lost millions of dollars in that deal.
Yeah.
But he's come back on the other side stronger and wiser as a result of it, right? And so he's like, I've got it down to a system. He's like, I don't even veer off. I always do these
Yeah.
exact types of
You got it.
deals. I stay in my lane. I don't worry about these other ones, even though I could make money. I
Yeah.
just do what I know and what I know best, and that's all I do. And those are the
Outstanding.
people I love. I think boring is sexy, honestly. Like the people that do something that's boring to
It's
them
so
is
hard
sexy to
for
me.
entrepreneurs to do that. They love the sizzle and the flash, to actually do something that's
Mhm.
different. Chris, I'd
It's
love to
true.
have you back again. I got so much more to talk about. I've met the Kiyosakis, have my real estate career. I'd love to chat with you again, but we got shows over today. Do you have anything you want to leave the audience with? You have a freebie or talking about your show or your book or something?
Yeah, you're more than welcome to follow my podcast, The Chris Miles Money Show. You can find on
Good.
any platform, YouTube, iTunes, whatever.
Mhm.
Or there's even my website, moneyripples.com. You can find lots of information on there as well about just ways to think outside the box. And, like you say, on average, we find at least $35,000 a year for people to increase their cash flow in year one.
Wow, love it. Yeah, I follow Cody Sanchez. I mean, you should follow her or not. She's got a thing called Contrarian Thinking. She
Uh-huh.
speaks the exact same language you do. It's a good person to follow. She's really super smart. Everything does contrarian. She buys laundromats, like you mentioned, all that. So it's interesting stuff. It's
I
great.
love it.
So Money Ripples, the website,
Yep, moneyripples.com.
moneyripples.com. Check it out. You'll find Chris Miles there giving you some contrarian wisdom about money and stuff. So we appreciate your time today, Chris. Thanks so much.
You're welcome.
And this is Doug Crow with All Your Brand Show. Please go ahead and click below, subscribe. There's some free goodies for those of you who just choose to subscribe at iTunes, YouTube, or Spotify. Have a good one.